Thank you very much for having me.
Jing, a lot of rhetoric, tough rhetoric coming out of Congress over the last couple of days, not only from Mr. Geithner himself, but from various members of Congress. What do you think China's reaction is going to be to hearing all this tough talk?
Well, you know, China clearly is not interested in engaging a trade war with the U.S. In the recent days, we're seeing the RMB appreciating more fast than the previous several months. As a matter of fact, the RMB reached an all-time high since 2005 when the reform began. So in the recent days, we're hearing authorities from China voicing concern about a possible trade war. In our opinion, the two sides, U.S. and China, need to engage in productive negotiations rather than trade dispute, because the two countries are among the most important economies in the world. If a trade war broke out between the U.S. and China, it wouldn't be in anyone's best interest.
The problem is, though, Jing, we've got congressional elections, you know, only a matter of weeks away, so it serves in the interests of various members of Congress to talk hard about sanctions against China. I mean, if it goes that far, you hear about potentially China selling U.S. treasuries. I mean, how could or would China retaliate?
Well, you know, I don't think China can retaliate, frankly, by selling treasuries. China has some 2.5 trillion U.S. dollars of foreign exchange reserves. About 65% of that is in U.S. dollar denominated securities. So given the size of China's holdings, it's nearly impossible for China to sell down a large quantity of U.S. treasuries. So I think going forward, China will let the currency appreciate steadily and gradually. And I think that's going to be in the best interest of China as well, because that is going to help the country transition from an export-led economy to more of a consumption-led economy.
And that transition, I know, makes you believe that we've got a substantial upside in Chinese equities in the future. Just tell me about your thinking.
Well, you know, the Chinese stock market in Shanghai and Shenzhen hasn't done very well in the last 12 months. As a matter of fact, they've underperformed global indices, emerging market indices for the past 12 months. Now, at current levels, Chinese equities actually present reasonably attractive valuation. Also, we're seeing the economy stabilizing. The deceleration we saw in the second quarter has stabilized. We're also seeing pretty strong corporate earnings growth. So in the future months, I think there's a good chance that Chinese equities should play some catch-up with global equities.
Which is the areas, which are the industries, which types of company, Jing, do you think are going to benefit the most that investors should be keeping an eye on?
You know, we're firm believers in this rebalancing story for China, which means sectorally the economy is transitioning from an investment export-led model to a consumption-led model. And geographically, the economy is transitioning from a growth led by the coastal region to the hinterland. So therefore, we're very bullish on the consumption story, consumer services. We also like logistics, as well as at this point, entertainment and travel, as well as the internet. Basically, everything that has to do with the new economy and the booming Chinese consumer market.
Obviously, Jing, it's very difficult for many of our viewers to gain exposure to China, especially in the A-shares market. So what would be your advice to them? What would be their best way of exposing themselves to this potential growth?
Well, one of the best ways to invest is through Hong Kong, because there are hundreds of Chinese companies listed in the Hong Kong market, and some of them present reasonably attractive growth opportunities. Another way to get exposure to China's growth is through the commodities sector and natural resources. China is short of everything from copper to coking coal, from agricultural commodities to natural resources such as oil. So you can buy a host of companies in Australia, Brazil, South America, and other regions to benefit from China's insatiable appetite for natural resources.
Jing, do you have any doubts about, within the Chinese economy? People talk about a property bubble. Peter talk about bank capitalizations. If the property bubble bursts, can they withstand it? I mean, do you have doubts in those areas briefly?
Well, we watch the property sector and the banking sector very closely. The property sector is experiencing a rebound these days. Transaction volumes are recovering. The government is trying to increase the supply of low-end housing, especially affordable housing, to try and stabilize prices. In the banking sector, in the coming few months, we have a lot of capital raising, but I think Chinese banks are reasonably sound in terms of their asset quality and balance sheets, and investor interest should return sometime in the beginning of 2011 once the capital raisings are out of the way.
Jing, thanks for chatting to us today. We'll speak to you soon. Jing Ulrich there from JPMorgan Chase, MD and Chairman for China Equities and Commodities.